It's the weekend and you have financial questions that need answering. That can only mean one thing. It's time for Jill on Money, the show that takes the mystery out of your finances. Here's your host, Jill Schlesinger.
Welcome to the Jill on Money radio show. Yes, indeed. This is the show that attempts to take the mystery out of your financial life. I am Jill Schlesinger, CBS News business analyst and CFP. Mark Talercio, also a CFP, the best executive producer in the world, running the show. And we are sponsored this year, for the whole year. It's amazing. We are sponsored by Facet Wealth. Facet Wealth is an investment advisory firm. And what's cool about Facet Wealth and why I am very happy that they have taken the plunge and joined us this year is Facet Wealth makes financial planning accessible to everyone. They've got flat fee, conflict-free planning. They're CFPs, fiduciaries. Pretty good, right? And they actually do not have any wealth or account minimums. So with that said, I want to remind you that this is a program that is based on you. So send us your financial questions. The email is askjill@jillonmoney.com. And when you send us your question, let us know if you want to come on the air. That's what Vicky did. She's calling from outside of Boston. Hello, Vicky. Tell me what we can do for you today on the program.
So I have a couple of questions. One is relative to the fees that my financial advisor charges me. And then second is if you have any advice on a hasty decision I made relative to term life insurance.
Okay. First, tell me, how old are you?
I'm 59, almost and a half.
I love that half because it becomes a magical number, doesn't it?
Yes. Yeah.
Are you working still?
I work for a university, yes.
Okay.
And I'm at my stand-up desk.
Oh, good. I mean, I don't know if it really works, but it does. It sort of like gets you uncomfortable enough to sit and stand, then sort of split the day that way. How much do you make at your university?
Just under 60.
Okay. Are you married, single, partnered?
Widowed, bummer.
Oh, total bummer. But you're too young to be a widow.
It's been 11 years.
Oh my God.
Mm-hmm.
That's terrible. Jesus.
Yeah.
Okay. Kids?
2 in their 20s. One's launched and one is still home with me.
You're such a good mom. Okay. When do you think you're going to retire?
Not a minute past 67.
Oh, I like that. But 67 is a good number.
There's too much I want to do.
All right. I hear you. You got a long way to go. You got like all this time during the pandemic to figure out what you want to do, right? And you got,
I already know.
Very good. And you got, 7.5 years to figure it out. On your $60,000 salary, does that support you? Do you feel like you've had a comfortable life right now?
Comfortable is relative. I mean, I try to live within my means. I'm comfortable. Yes. Would I like to have a higher salary? Of course, but I make do with what I have because I have a job that doesn't give me a lot of stress. And that's what I have to focus on, avoiding my stress.
Yeah, that makes sense. I mean, listen, there's trade-offs in everything, right? I mean, I feel the same way. Like, hey, I could be making a lot more money, but I love what I do. So then you have to say, well, how much isn't enough, right?
I do have a fulfilling job.
That's great. And so, Vicky, you work for a university. You must have a 403B. Is that right?
I do. I put in 10% and they match 8, except for 2020 when they withheld the match because of all the expenses they had to endure due to COVID.
Okay. How much is in your account right now in that 403B account?
$73,000.
Are you also going to be entitled to a pension?
No.
What else you got saved?
So I have an IRA rollover for $288,000. I have a Roth IRA. I was late to the game on that. I have $17,000.
Mm-hmm.
I have an inherited IRA for $163,000. And then the investments are $261,000, and I have about a 60-40 split on those.
Okay, that's good. If you were to look ahead, have you seen what your Social Security benefit looks like at your age 67?
Yeah. So I mean, every time I call them, I get a different response. But at this point, and it's very frustrating. At this point, I believe at 67, I will still be best off claiming my husband's Social Security.
Because he made more money, basically.
Right. So unless I get a higher paying job, I mean, I don't want to leave my employer before I retire, period, because the
Okay.
benefits are too good.
Okay.
But if I get a higher paying job, I may switch over to mine. But I believe that I just have to wait till 67 and collect his. But I'm always calling Social Security in case I get a really good answer.
Right. And then you have to call back to make sure you get the same answer again.
Exactly.
Right. What is the Social Security benefit that you would get from your husband's benefit at 67?
I believe it's about $2,500 a month.
Okay. That's good. It doesn't get you to 60 grand a year, but it gets you in the direction, right? In this current environment, are you only saving through your 403B or are you saving in your investment account as well?
Pretty much in the 403B.
Okay, so where you put that 10% plus the 8% match.
Correct.
Okay, all right. Doing that keeps you out of trouble. There's no debt that's floating around that I should be worried
I have
about?
zero debt and zero mortgage.
Oh, no mortgage either. Okay,
Right.
so you could potentially put more money away, theoretically.
Well, I like to have, I have about 10 months emergency cushion.
Okay.
So I'd like to beef that up.
All right. So once you do that, you want to get to like 12 or 18 months. What's the goal?
At least 12.
Okay. Once you get to that amount, what's the game plan then? You take the extra money and you're going to put it in your Roth because I think that would be a good idea for you to use the Roth. So if you have extra money, instead of putting it pre-tax into the 403B, I would put it into the Roth instead. Because you're in a pretty low tax bracket right now.
Oh, yes, I am. Yes, I am.
The good and the bad. The good news is you're in a low tax bracket. The bad news is you wish you were making more money to be in a higher tax bracket. But still, I mean, look, you're in the 22% tax bracket. You're going to probably end up staying there anyway, just because of income in the future. So
it's fine.
Yeah, that's fine. So tell me about the advisor.
So I went to him because a bunch of my friends were using him, and they were very, very happy with him. And I'm happy with him. He listens to me. We talk. He gives me pros and cons. We make decisions together. He honors my decisions. Super accessible, very communicative. But I'm paying him, I mean, aside from the $500 annual fee, I'm paying him approximately $500 a month, charges my portfolio about 1%.
So he's got the rollover, the Roth, the inherited IRA, and the investment account?
Correct.
Okay. And he's not giving you any advice on the 403B?
Oh, he does give me that. Yes,
okay,
he does.
But he doesn't manage it. He just sort of tells you what to do and you go do it?
No. So we go online. He sees what it looks like. He says, move this here, move this there.
I see. Okay. All right.
So yeah, I meet with him twice a year, but he's totally accessible any other time.
1% is not a ton of money to pay given the asset level. Okay. So here's what I think. You've got two big choices. You can say to him, it's a lot of money, dude. Like, I love you, but it's a lot of money. And I start the year off at minus $6,000 every year. And it's maybe not worth it for me. And maybe he would lower your fee. Okay, we're going to get back to Vicky's question. We're not done with her yet. In just a minute. If you have a question like Vicky, just let us know. You can send us an email, askjill@jillonmoney.com, or if you're on our website, which I have to say is quite fabulous. The website address, jillonmoney.com, and we've got a contact form right on the website. So check it out, jillonmoney.com. Okay, we'll be right back.
Do I invest here? Should I put my money there? Jill Schlesinger can help you. Back to Jill on Money.
Welcome back. It's Jill on Money. And before we went to the break, we were on the line with Vicky outside of Boston, and we want to get back to her question right away. So here we go. Back to Vicky right now to finish up our question. The other thing that you could do is you could try someone else. When I say someone else, another institution. So what are your choices? You can go to let's say Vanguard or a Schwab. These are big investment houses. And what they have is they have an advice component. So those are really cheap. Like you're paying 1%, this would be like 0.3% or a quarter of a percent. So you may not get a dedicated advisor. So you know how you said to me, like, I really like him, he's responsive. Like they'll be
Yeah,
responsive, but it won't be the same. It's not going to be like
yeah.
that customized holding your hand kind of
That's what I
feeling.
like. That's what I need emotionally as a widow. Still, I still have one kid at home. He needs a lot of hand holding. I know that I need that emotionally.
Okay, then the other one that I want you to maybe check out is called Facet Wealth. They sponsor my weekend radio show. They have flat fee planning, and it's based on the complexity of your situation. It doesn't sound like you actually have a complex situation.
Mhm.
So what I would do is I would check them out as well. Facet, Facet wealth.com. Check them out, see what you find there. And you would this way, with Facet, unlike some of the big houses, you do get a dedicated certified financial planner. You do get somebody, the same person every time. They'll tell you what the fees are up front, and maybe it's not that different. Maybe it is. I don't know. But I have a feeling it could be cheaper. And you might want to just check that out. But if you're going to go for a dedicated individual, you're not going to do better than 1%. That's my guess. Okay. Now, the other thing you could do, though, tell me about your 403B. Where is it held?
Fidelity.
I mean, you could roll over, the $288,000 you have? You could roll that over into the 403B. You could roll that back into the 403B. And then you could consolidate that money. And I don't know if he's charging you the 1% on the 403B or not, or just doing it for the heck of it. But Fidelity's cheap. Fidelity's easy. And frankly, if you said to him, I'm happy to stay with you, but I'm rolling over my IRA rollover into my current 403B, you can charge me on the Roth, on the investment account, this, that, and then your fee will go down because he won't charge you on as much money under management.
Interesting.
So you might want to try that. He might say, screw you, lady. Look, $5,000's a lot of money, Vicky.
Well, that's how I feel.
And it's a lot of money for someone who doesn't have a complex financial outlook. I mean, here's what you got. You say, I got essentially 7.5 years to click away and put money away, right? And he should be encouraging you to be putting more money into the Roth. And he should be really encouraging you to be looking ahead and saying that you can put more money away. Like if this is just asset management, 1%'s a lot of money. Like I'll hold your hand once a month for So I'd like to see if we can reduce that. Now, tell me the second aspect of this, which is the insurance.
So when my husband passed away, I bought from his best friend. He was the best man at our wedding. He was his best friend for life. I bought a term policy just to sort of get me through when I thought my youngest would be independent. So that was 10 years. Well, 10 years later, he's not independent. He has some life challenges that I help him with. And I feel like when it was time to renew, I felt like, well, why don't I just renew it? It's like the least amount of work, the least amount of energy I have to expend to make a decision on a chunk of money that I could be putting away every month. So I renewed it for a 20-year term, $300,000 payoff. So in other words, if I, pass away before 79, my two kids will split $300,000. So it was sort of an investment in a way, like guaranteed income for them.
Yeah.
And I didn't have a lot of time to make the decision based on the renewal period. So here I am paying $87 a month on this policy, which I don't get return on unless I die. So in other words, should I take the 87 and maybe add $13 more a month and call it an even 100 and convert it to a different policy with that insurance company, because it's one of these huge insurance companies nationwide that has all these different products. So that way I could have an investment, something that does pay back, that does earn, and still stick with him. I feel like I have a little bit of a personal obligation to stay with him.
No, you don't. No, you don't. You do not have any personal obligation to stay with him. So that's number one. Take a deep breath on that. I'm taking you off the hook on this. Really, that was probably not the greatest plan for you. The guy probably sold you what he knew he could sell you, but that wasn't the smartest thing for you. How much is your house worth?
About $360,000.
So, I mean, right now you have $1 million, okay? And your kids are going to split whatever you have.
Mm-hmm.
And I don't see why you need 300 grand of term life insurance in addition to that. So here's what I would do. I'd call up your, are you still friends with him or not? Tell me that
I am.
you
Yeah.
are. Oh dear.
Yeah. I know. It's an emotional thing.
Do you have life insurance through work?
Yes.
Perfect. Say to him, you know what? I didn't even realize I have life insurance through work. It's really great. I'm going to use that. I'm going to kill this policy. I'm done with it.
And
That's
then
it.
he'll say, what else can we do? What do you want to replace it with?
Don't have to. I can buy extra insurance through work. Thank you so much. That's it. You gotta pull the plug on that. I mean, honestly, unless you want to just throw your money away, you should not add $13 a month. You don't need insurance.
No, I meant was, they have other investment vehicles.
I know, but they're not good. Number one, and they're expensive. Number two, really, you're making this funny emotional decision about him. And it's really good for him. It enriches him, but he didn't really take care of you. He didn't look at your situation and say, you know what, actually, you don't need this insurance. Like if I were your best friend, your husband's best friend, I would have said, let's see what your employer has for insurance. Maybe we can buy it through there and it'll be cheaper. And I don't need the commission, stupid $87 a month. The guy's probably making, $40 a month from you. But it's like nonsense. You don't need it. You don't need this insurance. I do want to say one thing though. You mentioned something about your son. Is your son special needs, or is it just that he's a sort of like, needs some help, a little kick in the ass kind of help?
So it's kind of in between the two. So he does have some learning challenges and some mental illness. He works full time. He drives. He's a great employee, but he still needs some support at this time.
Because I'm just wondering, like, how you've set up your estate to make sure that he does not necessarily end up with, okay, for example, if you were to drop dead tomorrow, God forbid, that I hope it never happens. But let's say that did happen. Now there's $500,000 that goes into his pocket, $500,000 into your other kid's pocket. Are you comfortable with that?
Well, yes, because he had the sechel, which I know that you'll know what that means. Sechel, the foresight, the brain to go get a financial planner himself with my financial planners in his same firm.
Okay.
So I feel comfortable that he's being looked after.
Okay, good. All right, good. Here's what I would say about this. I don't think you should actually re-up this policy. I don't think you should add more to it. Even though, look, Northwestern Mutual is a good company. I get it. It's fine. But it is not, don't buy another product. Do not buy another product. And frankly, with $100 a month, I would be very happy if you just use that extra $100 a month to, pop into your Roth IRA or into your investment account, but not into an insurance policy. You don't need insurance.
He had originally tried to get me to buy a hybrid long-term care policy, but the rate was just ridiculous.
No, because you know what? He can only sell insurance. That's the funny thing. It's like if I go to a Toyota dealership, I'm going to buy a Toyota. And if I go to a Mercedes dealership, I'm going to buy a Mercedes. The Mercedes dealer is not going to say, hey, you know what, Jill? It seems to me that you should go over to the Toyota dealership because you don't really need a Mercedes. They can only sell me a Mercedes. That's it. And that's the problem with a lot of these insurance folks. I don't think you need insurance. If you said that I'm just like, I can't say no to this guy, and you just are very happy throwing away $87 a month, then keep what you have. Don't buy anything else. That's it. Thanks so much to Vicky for appearing with us. We so appreciate it. Why don't you do that? Why don't you hop onto our website, jillonmoney.com, read about some of the stuff that we've written, and maybe it'll conjure up a question that is on your mind, and we could help you out. So again, jillonmoney.com is the website, or you can just email us, askjill@jillonmoney.com. We'll be right back.
Back to Jill on Money, where Jill Schlesinger helps you take the mystery out of your finances.
Welcome back. It's Jill on Money. And you know what? It is Super Bowl weekend. Mark's like, how could you do the whole intro and not mention that? I don't know. He's so excited about the caller, Vicky. And, listen, I know that the people who are listening to this program from New England, may have somewhat mixed feelings about Tom Brady. I have no mixed feelings. I am 100% rooting for Kansas City. Mark, what are you going for? Do you care at all at this point? Okay, Mark and I are both 100% Kansas City. So we want that. We're into the youth, like old farts like me. We always root for the youth, the Utes. Anyway, if you've got a financial question, give us a holler. Ask Jill at jillonmoney.com. Ask Jill at jillonmoney.com. And if you are brave, you don't have to be that brave. Let us know if you would like to appear on the air with us. After all, we are broadcasting from the Capital One Bank virtual studios, meaning virtual, we can get you on with us. Capital One, this is banking reimagined. What's in your wallet? I know that we have tons and tons of people who have been sending emails and we can't get to them all. We just can't. It's impossible. Mark's like, there are thousands of emails that have come pouring in. We do the best we can. We try to take a smattering of the people who represent a lot of you. And so that's why, sometimes we'll get to you sooner rather than later, but just give us a shout. And if it's really important, you can always say, oh my God, I have to make a decision in the next blank period of time. Okay, here's what we got here. This is Herbert, who says that he's 58 years old. He's divorced. He's retired. He's got no kids. He says, I've never owned a home and I would like to purchase one in retirement. My question is, how much should I spend for a home based on my income and my retirement portfolio? The only debt is a car loan, which he plans to pay off this year before purchasing a home. He says, I receive $3,800 each month from my pension. That's good. My healthcare premium is deducted from my pension. I've got 40 grand in cash. I've got $100,000 in a Roth IRA, and I have $800,000 in my regular 401k. My current budget is $5,600. I spend about $4,600 and put the rest towards building my cash savings. That's great. One last thing. I'd love to travel. I'd like to allocate about $10,000 a year on travel after I purchase my home. Well, I mean, look, you can back into this just by talking to a mortgage broker, because I think that one thing that's clear is because most of your assets are held in retirement plans, that I really would not want you to deplete money from the Roth or money from the 401k. So what I would be really keying on here is your ability to save money in cash for a down payment and then figuring out what monthly mortgage payment plus taxes plus maintenance and all of that you could do to really swing this on your budget. I would also be interested in understanding why buying a home is so important for you, because it may be that keeping the money that you've built up, that liquidity, is more important than a house. So I'm kind of rooting for maybe you won't even buy a house. And if you want to follow up with us, that's fine. But I don't know. I like renting in your situation. Gives you lots of flexibility, travel's easier. I don't know. Seems better to me. And now we have a question from Frank, who has relocated to Arizona from California. A great move, by the way. And he said, I never heard your program before. I like it very much. Okay. I'm 69. I'll take Social Security when I'm 70, about $18,000 a year. I'm currently retired, not working, no debts. My father passed away 2 years ago at age 95. Oh, man, these people live a long time. I inherited approximately $1.7 million. God, may God rest his soul. And now I've got $1.5 million after paying off obligations. I bought a house, and he owns it free and clear. And then I sold my 1,000 square foot house in California for an insane amount of money, which brought me more than back to even. How about that? So that's a good trade. He sold a house for 1,000 square feet. He bought a house for 3,000 square feet, and he owns it free and clear, and he made money in the process. That's amazing, right? I've had some investment experience. I read a couple books, and he says, I live very simply without a lot of expenses. He says, let's say 30 to 45,000 a year will be fine for now. Great. I've never been able to save much through the years. And also with two market drops in 2000 and 2007, it's been hard to save and accumulate. He's got $150,000 in a Roth IRA. And so here are the goals. I want to have some funds to safely make the capital appreciate and have some money for income and safety. I have an emergency reserve fund, 2 to 3 years of current expenses. But I would like some advice about allocation. So, okay, he's considered a bunch of different funds. And he says, I'm open to any suggestions. So, when we come back from the break, let's talk a little bit about what Frank's outlook should be and how he might want to think about his allocation. Okay? So you are listening to Jill on Money. During the break, here's an idea. Go to our website, jillonmoney.com. And then what you can do is you can sign up for our free weekly newsletter. It comes out every Friday. Mark does a great job getting all sorts of cool content on that newsletter. So check it out. jillonmoney.com, free weekly newsletter, and we'll be right back.
Welcome back to Jill on Money, where Jill Schlesinger takes the mystery out of your finances.
You're back. It's Jill on Money. And if you're just joining us, we are here to take the mystery out of your financial life. Before we went to break, we were answering a question from Frank, who had relocated from California to Arizona and wanted some help after making quite a change in his financial life. Two things happened. He sold his small house in California and bought a much bigger one in Arizona and actually made money in the process. And he inherited some money from his dad a couple of years ago, and he's got a whole bunch of money to invest. So right now, he's got a lot of, essentially, he's got this brokerage account that now has, let's say, about $800,000 in it. And he's got a Roth IRA with about $150,000 in it. And he's got some money set aside. And he's asking about specific funds. Now, here's the funny thing. I actually believe, Frank, that you may want to talk to somebody. I mean, if you feel comfortable investing, that's fine. That's fine. But since you're asking me this question, I think that you have to be a little bit careful about, what you have. You've got money in a bond index fund at Schwab, and money in a stock index fund, and money in an international fund. So I like the funds that you have that are in your Roth IRA. As far as everything else that you have that's in the brokerage account, it seems fine. But I'm not sure why you want a higher yielding bond fund. I wouldn't do that because I don't think you need any risk. So I would not put a high yield bond fund in there. You asked me about two different ones. You have income. I get it. But I don't know why you necessarily I'm not sure you need a municipal bond fund. You should really try to do the math to see whether that makes sense. I don't think that you need to increase any of your stock holding. I would basically be this, 40 to 60 either way, meaning you could have 40 stocks up to 60 stocks and whatever you're comfortable with. If you want to take more risk in your Roth, I guess that's okay, but why take risk? I don't know. I think you're in good shape. I would stick to the funds that you have. I like what you have, and I would not add a high yield fund because I don't think you need that risk. And who wants a problem? You don't need to ask for a problem here. So that's my 2 cents. All right. Okay. Next up is Rob. He says, I've been listening to the podcast for a while and I've got a few questions about my father's situation. Oh, by the way, if you'd like to listen to the podcast, just go to our website, jillonmoney.com, and there you can actually find a link to our podcast. It comes out daily. So you get a daily dose of Jill and Mark. Kind of great. So, okay, now back to Rob. Rob's dad is 68. He's retired and he has defined pensions. Plurality. Oh my God. So from his pension income, $7,100 a month. How about that, Mark? Nice, huh? Okay. Of course, he's paid off his mortgage. He's got no credit card debt. So he gets $7,100 a month. His average monthly bills are $2,500 a month. He's got about $155,000 in the bank to invest. He doesn't have any investments like a 401k or an IRA. He does have an annuity, and it was an employer contribution. And it was about 40 grand. It's required to be, he's going to have to take distributions from that. He says it's required for distribution at 70 and a half. I bet it's not. I bet it's 72 now. So you want to double check on that. Anyway, he's looking to invest in the future for my sister and me. We're in our 40s. He's got $50,000 in life insurance to cover all funeral expenses. He's a U.S. Navy veteran. He needs your help. First of all, I don't know. Does he have $155,000 in the bank beyond his emergency reserve fund? Then maybe, I guess, that would be okay to invest. But he should just have a year or two just in cash. That's number one. In terms of where to invest for you guys, it strikes me, Mark, that this question and the one before it, these people don't have a lot of investment expertise. These may be good people who should consider, just for asset management purposes, looking at a hybrid investment advisor. So, again, that would be Vanguard Personal Service Advisor. It would be Schwab Intelligent Portfolio. It could be our sponsor, Facet Wealth. But in general, when you're putting money away, I think that it's very easy to say that you could just pick 3 mutual funds, 3 or 4, a stock index, an international stock index, and a bond index fund, and call it a day. And that's it. So I don't think you need a lot more than that. I just want to make sure that if he's investing money, it's money that really he does not need. So the investing part of this should be money that is in excess of his 1 or 2 years of basically expenses in the bank, just in case. Okay. Look, if either you or your sister has kids, he could also potentially do some stuff that in that way, maybe put some money in a 529 plan and invest for a future generation. But you didn't tell me about that. I put that in your thought process to consider. Okay, so if you have follow-ups, let me know. It's Jill on Money. And during the break, when you're on our website, jillonmoney.com, after you've signed up for the free weekly newsletter, after you've subscribed to the podcast, you can also do what? What can you do? You can actually send us a question. Hit the contact button. Very easy. Okay, Jill on Money. We'll be right back. You're back. It's Jill on Money. If you have a financial question, an investment question, a tax question, tax season opening up very shortly. Maybe you are excited because you've cashed in on your GameStop earnings and you want to know what to do with them. That's just a joke. We're going to talk all about that next hour, I promise. Just give us a shout. Our email address is askjill@jillonmoney.com. This is from Simone, who says, "Hi, Jill. I love your style and approach to finances. Now, here's a question. When you're figuring out if people have enough money to get them through retirement, approximately what interest do you apply to their nest egg when you're considering their yearly need and number of years? So the way I look at that is a very back of the envelope calculation, and you should not rely on it. It's just a quick way for me to get a sense of how close people are. You really should run your retirement numbers because things change, right? So what I do is I look at it, let's say you, Simone, had $1,000,000 and you're looking to retire. I'm usually thinking that people are going to live at least till they're 90 because, longevity is kind of out there. And if you're under the age of 50, I'm kind of thinking 95. And what I'm doing is just a safe withdrawal rate. And a safe withdrawal rate, which means you apply a percentage to the total invested assets. So if it's $1,000,000, maybe it's 2.5 or 3%. And the reason it used to be 4% that people would use. I use a lower number because I don't know how much money we're going to earn on your money. I think it's safe to say that we used to say, gosh, I hope I get 6%. Maybe it's going to be 5, maybe it's going to be 4. I don't know. And it also depends how much of that money that you've saved is in retirement versus non-retirement. So that's the important thing to consider. And Simone finishes by saying, I recently started listening to your podcast. I love them. Since I'm a new listener, have you spoken about when it makes sense to insure for long-term care? I have. Mark, send her some long-term care stuff. Okay, check it out. Next hour, we are going deep into the Reddit, GameStop, now silver, whatever comes next, fiasco of the last couple of weeks. And we're going to have a special guest, Jeff Bakalar, editor-at-large of CNET. And we are going to have a great conversation. So if you didn't understand what the heck was going on with GameStop, keep it tuned right here. It's Jill on Money. JillOnMoney.com is the website. Jill on Money will be right back.
It's the weekend, and that can only mean one thing. You're listening to Jill on Money, the show that takes the mystery out of your finances. Here's your host, Jill Schlesinger.
Okay, you're back. It's Jill on Money. It is hour number 2. And let's see, we got a big hour ahead of us. I know that everyone has been fascinated by this GameStop story. So I have a very special guest, Jeff Bakalar, who's been on the program with us before. He's editor-at-large at CNET. He's going to help disentangle this story for you. And I think that you'll be happy that we did it because this is tough stuff, right? It's a lot of different pieces of a story that's woven together. So, which is why it really was sort of captivating. That said, I hope that none of you are short sellers and doing stuff that you don't know about or buying GameStop or silver and then getting smoked out like up, down, sideways. This whole thing's not going to end well for some people. Some people it's going to end very well for. But if you need help with your real financial life, well, let me tell you what. We are sponsored by Facet Wealth. And Facet Wealth is an investment advisory firm that is accessible to everyone. Facet has flat fee, conflict free financial planning. And you get it from certified financial planners who are fiduciaries, people who are looking out for your best interest. And they use goals, not just money targets. So real stuff here. And you're going to get this dedicated advisor, not someone in a call center. And maybe the best part is there are no wealth or account minimums. Facet is able to meet you where you are. So check them out, facetwealth.com. All right. So if you made a bunch of money because you were smart enough to buy GameStop, but even smarter enough to sell it, then maybe you do need Facet Wealth. Anyway, here is our interview with Jeff Bakalar. We're starting with a real basic ABC of what is Reddit. Here's our interview with Jeff. First of all, for our listeners who may not be as familiar with Reddit, can you talk a little bit about Reddit, the platform, kind of how you understand its power today?
So Reddit is the largest community platform on the internet. And it's basically made up of these things called subreddits, which are little categories within the sort of platform of Reddit. If there's something that is a thing in this world, there is a community for it on Reddit. So, I frequent the subreddits for hockey and the subreddits for pinball and all the things that I'm personally into. Just like every, a hobby, every facet of human culture, there is a place for people to congregate and talk about, the things that they're interested in. That is good and bad. You have undesirable subreddits that pop up, and you have subreddits that do, good in the world.
The communities are really diverse in lots of ways.
Yes.
And so you can pretty much find what you want. Like I went on a subreddit to look at information for people who use the Peloton app on non-Peloton bicycles. I just was like, hey, let me look at this, right? So
sure.
And it was actually incredibly helpful. And so, people run into problems. Hey, my right pedal stinks, so does mine. And so this is not to be seen as anything more, as you said, it's a humongous community. And the community talks about different topics. Fair enough?
Yes. And it's gotten to the point, to your example that you just made, it's gotten to the point where sometimes searching Reddit is maybe a better idea than searching Google for something.
Oh, that's interesting.
Because you have so many examples of human experience on Reddit, especially when it comes to like the way we interact with products and the way, we sort of are honest with experiences. That stuff is so easily searchable on Reddit. And you know what? I can't tell you how many times that I'm searching on Google for a thing, and one of the first returns is maybe a thread on Reddit. So you're going to wind up visiting that one way or another.
Now, tell me how Reddit as a company, they were under quite a bit of pressure because there was like a bunch of misogynist stuff there. There's racist subreddits there, so obviously in light of the news of, essentially the last 5 years, Reddit itself had to do some different kind of analysis of, what's fair play out there, what should be taken down. So how did they do that?
Reddit is on the internet. And with that comes a lot of, responsibility and a lot of dangerous, people, really, to be quite honest. So, just like a lot of other platforms, Reddit has had to walk the line of really policing themselves in a way that makes sense, congruent with platforms like Twitter and Facebook and, other social media networks. So I think Reddit kind of does still, even though it is one of the most popular sites on the internet, it does still occasionally live in its own orbit and is not always under the same scrutiny as Twitter and Facebook. That said, they do a lot of policing. They do a lot of deplatforming of, really awful stuff that does pop up on their site. It is this cat and mouse game that is really never going to be 100% safe and balanced. But I think they are responsible in a lot of ways. There's always room for improvement with stuff like this. And they do get rid of subreddits. If a subreddit does wander into that territory of being, malicious and violating their terms of service, they will terminate the subreddit, or they will ban it, or they will lock it down, or they will, take things into their own hands and make sure that they are not offering a place for that sort of stuff to percolate.
Okay, so now let's move on to the subreddit called Wall Street Bets. This is a subreddit. I don't know. I haven't checked lately, but I think it has 3.5 million people who have been flooding onto it. It was on this subreddit where you had a lot of chatter starting a couple of years ago, actually, about buying and selling stocks. And it's been kind of a home for speculators. Let's just put it that way. I'm not saying who these people are because we don't know, right? There isn't a way for us to know who exactly is on this subreddit. Is that right?
Yeah, I mean, technically you can be completely anonymous on Reddit. I think a lot of people are. It's funny you said, what did you say, 3 million people?
3.5 million, I think.
Yeah, I just looked. It's at 6 million.
Okay, there you go. So now it's been like doubles in days.
Right, which is just mind blowing. And again, and we'll talk about this a little more as we move on here. But this was not a subreddit that had this amount of attention a week ago. I think you had a mix of people on this subreddit that really did come from all walks of life, but maybe perhaps dominated by a group of people who maybe had a little bit of money to invest, maybe were a little well off, definitely operated outside of the normal Wall Street circles.
And which is actually funny because the Wall Street Bets subreddit, there were some folks on there that were talking about GameStop, which, I mean, it's a brick and mortar video game seller. Jeff, when's the last time you walked into a actual physical GameStop?
Oh my God, 5 years ago, 6 years ago?
I mean, if I had said to you, what do you think about the fortunes of GameStop? And I asked you that a year ago, what would you have said?
I would be surprised that they're still around.
Exactly. We'll get back to our interview with CNET's Jeff Bakalar in just a minute. If you've got a financial question, just send us an email. It's askjill@jillonmoney.com. We'll be right back.
Do I invest here? Should I put my money there? Jill Schlesinger can help you. Back to Jill on Money.
You're back. It's Jill on Money. And we're devoting this hour of the program to really responding to everything that went on in GameStop. I have a ton of stuff about this on our website at jillonmoney.com. I did some TV appearances, did a bunch of quick podcasts about this, and maybe you might want to check those out. Any of the stuff will give you the basics. I do a deep dive, and if you look at the read tab, I did a long article about what this whole fiasco meant for some people and what it didn't mean. But we are very fortunate because my friend Jeff Bakalar was able to hop on the program with us, and we recorded this before the real damage was done, where really before a lot of the GameStop buyers experienced what it was to have the euphoria of the win, but then have to suck it up when the stock went down. All that being said, these are dangerous things to do. And this started with something that will continue to, I think, show its power, and that is Reddit, the online forum. In this part of our interview with Jeff Bakalar from CNET, we are able to drill down. So first we started with Reddit. So if you missed that, you'll have to go on the website and check that out. Now we're going to talk about the subreddit, the topic that it was sort of the source of this, called Wall Street Bets. So here is more of our interview with Jeff Bakalar, editor-at-large of CNET. So on Wall Street Bets, there was some chatter about GameStop. This was interesting because it sort of has a Hollywood connection in some respects. The guy that was featured in Michael Lewis's book, The Big Short, the one who bet against the housing market, is a guy named Michael Burry. He had amassed a pretty big position in GameStop. He bought that stock. They were talking about that on Wall Street Bets. I mean, this is like 2019. It was like when stock's $4 or $5 a share. And then last fall, little like more of like internet stardom, the bandwagon for the company got really big because the co-founder of Chewy.com, Ryan Cohen, he amassed like a 12 or 13% stake in the company. And this got the subreddit Wall Street Bets on fire. People were so psyched, right? And at that point, it starts to become something different as far as I'm concerned. I think there's like a real shift. Like, I think that there are some people who are on Wall Street Bets who said, let's find some cool companies. They might be speculative, but Jill and Jeff are sitting there having a conversation. It's at the dustbin of retailers. Maybe it isn't. Then you start talking about it, but then it became something different. It became a way to try to stick it to the people who bet against GameStop. Do you think, Jeff, that happened basically this year, or was that last year also?
I think it happened in the second half of last year.
Okay.
I think you had this community that was, very transparent about their opinions. Like anybody could go on to this site and read what was going on, and sort of with very little research, very little time, you could figure out like, oh, they realize that GameStop is being shorted in such a way that the opposite approach could probably make you a lot of money very quickly. I don't want to say that Wall Street Bets is solely responsible for what's happened in the last couple of days, but they were absolutely the driving force for what happened. I do think once this, sort of fuse was lit, I do think you had a lot more people realizing what was going on, jumping on that bandwagon. And now we're sort of in a situation where we know where it sort of all started, but we're not 100% sure of where it's currently, tug of warring right now, if that makes sense.
Okay, so let's take one step back, and Mark's going to kill me if I don't do this very succinctly. Here we go. Short selling. I think that a company is overvalued. I can make a bet against that company. And that means the way I do that is I don't own the stock. I borrow stock from an investment company. I sell it out into the marketplace. If the price drops, I go out, I repurchase the shares, and I'm able to basically collect the difference. I sell it for 10, I buy it for 5, I make $5. That's essentially it. Okay. Now, if I go out and borrow the stock and I sell it for 10 and it goes to 15, then I am in the negative column. I've lost $5 on paper. The short selling can be very dangerous, right? Because Jeff, if you went out and you bought GameStop and you said it's $5 a share, I bought it. The worst you can do is see the stock go to zero, right?
Right.
That would suck. But if I sell it at 5 and it goes to 10, it can just keep going up.
You have a possible infinite loss.
Exactly. We call it, unlimited downside. I mean, you just can keep getting this crazy parabolic ride higher.
So here's my question to you, though, real quick. Yeah. So when you do borrow these shares, right, mm-hmm. when you're basically borrowing from one of these brokers, mm-hmm. how does that relationship shake out? Are you borrowing at some sort of do you need to pay some sort of fee to borrow? Because I think a lot of the confusion with people's understanding of the GameStop situation is, hey, okay, so these guys are driving up the price. They're driving up the price. What's the end game? Is there ever a point where, the money's due, you got to pay up? Is that what this is sort of, leading towards?
One of two things usually happens. The company where I borrowed the shares from it, they require me to keep some collateral. Like it's a loan, right? And so there's got to be money in the account, right? That is just, it's there for me. And it's there for the company. And then there's extra money in there in case the stock position goes against me, in case the stock starts to go up. When you have a transaction, a short transaction, you got to put up a lot of money. And if the stock goes higher, you have to put even more money in that account. So when you say, is there usually a conclusion? The conclusion is one of two things. One is the investment company says, hey, you've got to deposit more money in this account because this position is moving against you.
Right.
It's kind of like the casino saying, you're running this money here. We're on account. You got to put more money into the account and we'll continue to let you play.
Right. Like your tab is in the red. Let's go.
Exactly. Let's put a little more money in there. So that's a margin call. So an investment company can say, put more money in the account right now. If you don't have that money, they can basically shut you down and basically call it quits for you. Let's say you do have the money. You put the money in the account and it keeps going up, up, up. Then what can happen is essentially what most short sellers do is they pick some point in time where they say, that's too much for me. They'll go out, buy the shares at the loss, send the shares back to the investment company and just get out of the trade. Like any bad bet, like, I made a mistake. Let me get out.
Right.
A lot of people do this the other way. Like I buy a stock, I buy a mutual fund, I buy something, it goes down in value, it hurts too much, I sell, I get out. In this case, the investment company can force your hand in a pretty major way. Before all of this, Jeff, what was your opinion of a short seller? Did you have one?
My exposure to that was, that movie, right? Like that's
The Big Short.
The Big Short, and of course, Trading Places. My entire understanding of our economic system is only through the lens of film and it's funny when you bring up the person that, The Big Short is adapted from.
Yeah, Michael Burry. Yeah.
I think he is looked at as the hero in that.
Right.
And he does bet against everything, right? Like, and that is the thing. I guess I'm sort of on the fence, right? Because in the way this story is shaking out, I think the narrative kind of places the GameStop shorters in a dark sort of shadowy light, because you hear all this stuff about basically over shorting the company beyond 100% of the stock that's available. And you do think like, well, how is that okay? And how are they allowed to do stuff like that? And, I've also read a lot of stuff where it's like, we need the ability to short stocks because in some way it keeps businesses honest and it sort of sniffs out the bad actors. So I guess I'm sort of on the fence still with how I feel about short sellers.
Well, we'll get back to our interview with Jeff Bakalar in just a minute. If during the break you have a question, all you need to do is send us an email. It's askjill@jillonmoney.com. And if you're on the website, we have a contact button. So do just check it out. Click on the contact button, send us your question. We'll be right back.
Back to Jill on Money, where Jill Schlesinger helps you take the mystery out of your finances.
You are back. It is Jill on Money, and we are broadcasting from the Capital One Bank virtual studios. Capital One, this is banking reimagined. What's in your wallet? Maybe what's in your wallet is some extra cash because you were so smart, you bought GameStop, but then you sold it. You paid your taxes, you've moved on, and no, maybe not. I don't think most of our audience is the GameStop types, but if you are, congratulations. We are lucky enough to have guest Jeff Bakalar. He is the editor-at-large at CNET. What Jeff is able to do is try to discern what does this story tell us about the state of the internet right now. So here is more of our interview with Jeff Bakalar. I think we really were wondering, both of us, like, what does this really say about the power of the internet and the intensity that it creates, the amplification process? You said something that was fascinating to me. You said, this really just shows you that we're like in the infancy of this. What did you mean by that, Jeff?
What I meant was, we have still yet to understand how the internet affects our culture and how quickly it does, or at least maybe not appreciate it, right? Like, we just can't kind of get out in front of the massive swings in opinion, in action that is capable with a groundswell of support from something that originates on the internet. And I think you saw it in our political cycle. If you didn't see it, where were you? Because it smacked everyone in the face. I do believe that this is yet another, I don't want to call it a side effect, but maybe a byproduct of what is happening with our inability to sort of progress with certain things in our modern day life, right? Like, I think there's still a lot of growing up that our culture has to do with how the internet and real life mesh and interweave and sort of feed and react off one another. And when you have a moment like this in time, I think 50, 70, 100 years from now, people will look back at these milestone moments where the needle did move. And, I think a lot of attention will be drawn to these, what I believe to be historical moments. What we're seeing with what's happening with Wall Street Bets and the reaction to the stock market, to me, is just another example of how there is still a huge population of people who do not truly appreciate the power of the internet.
I think your observation is much smarter than mine, that it says more about where technology is than where Wall Street is. In some respects, this surge of interest and this ability to have conversations with millions of people concurrently is a technology story, not a trading story. It's just the target was the trading story. I wonder from your perspective, if you think, does this instance where we have investors on Reddit, this big message board that band together and say, we're going after the people who bet against this company called GameStop, does that bolster the case for having more regulation of the internet or more intervention or clamping down from the government? Is it essentially a piece of information that regulators and antitrust folks are going to use to clamp down on the internet?
Whenever you hear about regulation of the internet, I think everyone's sort of, ears should perk up and sirens should blare and red flags should be raised. To me, when I look at a situation like this, I don't necessarily think, and I know you agree with this, where anything truly nefarious did happen, especially from the Wall Street Bets, point of view of the situation. I think the idea of regulating a communication evolutionary, fragment of human life because it's not falling in line with a, 100-year-old, financial institution seems maybe a little, regressive, right? I just don't think that's the sort of way this is going to shake out. What I do think is this entire situation is really falling in line with the spirit of what the internet is really about. And that is that knowledge is power, that education should be open and free to everyone. Institutions that were previously sort of behind this clubhouse velvet rope, if you will, are just not a viable way to conduct life when the internet is a thing. And I think moments like this prove that is not a sustainable way to live in a free world. This shows that, you cannot have these institutions and their privilege operate in the way they do and think that you're just going to be able to get away with it for as long as they have been.
Okay, so there are some that I've spoken to because, I think Wall Street has such entrenched interests. And, I know that we have seen the story play out as David versus Goliath. Like, hey, it's a small retail investor putting it to the short seller, which may be true. And I'm psyched about that because big investors have always had the advantage, right? What if we come to find out, Jeff, that on this subreddit, we actually had big investors. We had some hedge fund people who were helping to rile up the crowds. I think that that's going to be a regulatory focus because then I wonder, is Reddit going to be forced to moderate some of the stuff or find out who these people are?
It's a good question. I mean, again, like, and more about this than I do. What is that considered? And how is that different from what happened on WSB?
Well, for example, if the subreddit people, if they had non-material, non-public information and they were putting it out into the community, then securities regulators would be like, oh, that's insider trading. Bang, you're slapped, right?
Sure.
But there are some securities rules about market manipulation. So let's say that, like, maybe you are Michael Burry, the guy from The Big Short. Maybe you did buy GameStop because you thought it was a good business, or maybe you were this other guy from Chewy.com, right? Maybe these guys really had fundamental issues that they were doing, but maybe other people who had long positions, meaning they bet that GameStop was going up, used that subreddit as a means to try to manipulate the market. Then I think the securities regulators actually have a place to step in here. That's going to be an interesting part of this. We'll get back to our interview with Jeff Bakalar of CNET in just a second. Hey, here's an idea. During the break, go to the website, JillOnMoney.com, and there you can subscribe to our podcast. It's called Jill on Money. Daily, 10, 12 minutes, bite size. You'd love it. All right, we'll be right back.
Welcome back to Jill on Money, where Jill Schlesinger takes the mystery out of your finances.
You're back. It's Jill on Money. And, the last couple of weeks has been absolutely insane with this GameStop story. Again, this is a story that has a lot to do with new aspects of technology, but it's really an old story in some respects that a bunch of people get together, say buy, 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 and, people follow. It's just that with the power of the internet, with the power of social media, we have amplification that we've never seen in the past. We also have the ability for people to trade for free, zero cost trading. And we have these apps that make it so easy to execute these trades. So what happens next here? What is the next part of this story? I think that Gary Gensler, the new head of the Securities and Exchange Commission's got a pretty heavy lift ahead of him. And he's going to have to figure out what was going on in that subreddit, in that Wall Street Bets subreddit. And was there some manipulation? Were there bad actors? We don't know, but that's what Jeff Bakalar and I talk about. So here is the conclusion of our interview with Jeff Bakalar.
Look, I do believe I'm with you in the sense that I think once the scale tipped and people realized what was happening and that there was about to be this massive surge in GameStop and there was this big buy that was going to be starting to accumulate and snowball, I would be shocked if there weren't heavy hitters in that subreddit sniffing out what was going on and then said, hey, I'm going to ride this wave too. That, of course, makes sense to me. And I don't know if that's illegal. It sounds like that would not be illegal because it's not necessarily insider trading. You're sort of just recognizing the thing that's shaking out on that subreddit. So,
okay, here's what I did. I just went to the SEC, the U.S. Securities and Exchange Commission, and it says market manipulation. Market manipulation is when someone artificially affects the supply or demand for a security. For example, causing stock prices to rise or fall dramatically. Okay, that's market manipulation. That's the definition. Now, here it is. Market manipulation may involve techniques including, ready? Number one, spreading false or misleading information about a company. I don't think that's the case here.
No.
Because I think they knew what the company was. They actually, I have to say the subreddit, there's these people are doing some serious research.
Oh, yeah.
Intense, right? Okay, number two, engaging in a series of transactions to make a security appear more actively traded. And here's number three, rigging quotes, prices, or trades to make it look like there is more or less demand for a security than is the case. I have to say, I'm looking as I read more about market manipulation. I don't know. It doesn't actually seem like that was the case here.
Right. I think you're right.
All right, we're done. No,
Case closed.
Case closed. We're done. I just think it's so interesting because tell me how you think this plays in the whole discussion of Section 230, which seems quite mysterious to me. This is basically that internet platforms like Reddit, like Facebook, basically say, hey, we're like the phone company. We put the lines out there. What people say on those conversations has nothing to do with us. Is that about right?
Well, the big issue and the reason why we've seen a lot of that in the news lately is obviously because of what has transpired with, actual violence in the real world, right? And actual nefarious and dangerous incitings of violence. So I think, that was the straw that broke the camel's back in a lot of the deplatforming that you saw in recent months, right? So I think that conversation gets a lot more complicated as you get to the more granular, specifics. I don't think this situation is outside of that conversation, but ultimately, I don't think fundamentally a platform like Reddit will change what their users can talk about. That is just not, again, this is a much different thing than hate speech and inciting violence and racism and all of that really icky stuff. There's a gigantic chunk of this country, the majority, that is not invested in any meaningful way So, who does that truly affect? It's not an apples to apples situation.
Is this a good story? Is it a bad story? Like, what is this? How do you make sense of this right now?
I think it is ultimately, I don't want to say good, but I think it is ultimately a positive story. And I say that because you now have a gigantic, I don't want to call it leveling of the playing field, but you also have a ton of people who are not educated in this world all of a sudden, maybe not educated, but exposed to it, right?
Mm-hmm.
And I do think ultimately your biggest asset is knowledge. And I think the more you know, the more educated you are, the better off you are, and the better off the world is in general.
Did you catch Michael Burry's tweet during the week where he said, ready for this? If I put GameStop on your radar and you did well, I'm genuinely happy for you. However, what is going on now? There should be legal and regulatory repercussions. This is unnatural, insane, and dangerous. And so I would just like to say that those who are investing in stocks like GameStop or whatever the next target is, you got to be prepared for a wild ride. And please, you should only risk what you can afford to lose. Are you on board with that as our parting message, Jeff?
Oh my gosh, 100%.
Well, thanks again to Jeff for showing up. Catch his stuff. It's so great. He's so smart. At Jeff Bakalar is his Twitter handle. He sends most of his stuff out there. And Mark will have that in the show notes. And when we come back, we'll finish up the program with a question from you. If you've got a financial question, ask Jill at jillonmoney.com. We'll be right back. You're back. It's Jill on Money, and just want to thank Jeff Bakalar once again. You should check out his stuff. He's got a great run of interests spanning from technology to gaming to hockey. It's and pop culture as well. So at Jeff Bakalar is his handle. Okay, now before we get going, let's answer one question from Ron, who says, subject, Bitcoin. And he says, there has been a considerable amount of talk about cryptocurrency, Bitcoin. What's your opinion? Well, Ron, when we first were talking about Bitcoin, we were like, don't get in, avoid like the plague. I don't really feel that way. Now I'm thinking that Bitcoin occupies a similar asset class to, say, gold, which is, if you want a precious metals position to protect you against, let's call it Armageddon, then I think that Bitcoin can be part of that type of investment. And it's interesting because a lot of the big players have gotten into Bitcoin, meaning a lot of the people who thought it was sort of like, that's speculative and it's crazy, have come back around and said, okay, now I'm in. So my opinion has shifted a little bit. It's gone from purely speculative to, maybe it could be like gold. I wouldn't put all of my money into it, but I sure would be interested in, if you are going to do it, that make it an asset class and treat it as such, not something really crazy as like a flyer and you're going to spend your Bitcoin. Okay. Want to thank you so much for listening. I hope you enjoy the Super Bowl. Go Kansas City, of course. And if you have a question and you would like to come on the air with us, send us an email. Ask Jill at jillonmoney.com. Ask Jill at jillonmoney.com. Want to thank our sponsors again, Facet Wealth. FacetWealth.com is the website. And remember, if you want some goals-based financial planning from a dedicated certified financial planner, dedicated advisor, not a call center person, no wealth or account minimums, Facet Wealth, they meet you where you are. If you want more about that, head over to FacetWealth.com. That's FacetWealth.com. And you can always email us day or night or day. Ask Jill at jillonmoney.com. As always, we would like to remind you to wash your hands, to wear your masks, to maintain your physical distancing, and to do something nice for someone else today. Thank you so much for listening, and we'll talk to you next week.